Hey, this is Danielle, and today I'm going to talk about a squeeze setup in Google. So, looking at Google, there's a few things that I like about this chart. I'm going to start off talking about the weekly chart. On this weekly chart, there's a couple things that are important to note. Number one, it bottomed out last October, and since then, we've seen a pattern of higher lows and higher highs. So, number one, nice solid trend here. We've also seen the colors shifting on my trend strength candles. So you can see that they've shifted from red to yellow to green and then bright green. That is demonstrating, again, the trend that is shifting. We're also seeing volume inflows, and then the squeeze is firing to the long side. When we have a squeeze firing to the long side, that's going to set some pressure loose, and in this instance, because the trend is going higher, that pressure is also going higher. Now, you'll notice I have a couple different areas of resistance. These are going to be Fibonacci resistance and target zones. You can see right here, my next zone is going to be 110. After that, it's going to be around 114, 115, then about 120. So you can see that the weekly chart pattern, has shifted to the long side, looking pretty good, pretty decent. So let's look at the lower time frame chart patterns. On the daily chart, this is where you can really start to see that we've had a pretty positive trend since all the way back here down in March. And then you can see that you also have a daily squeeze. So when you're looking at the daily squeeze, this one's exciting because it hasn't fired yet, and because we're seeing this volume where it's shifting to the upside. You can see that there's white dots here and then red dots. You also have some red bars, but we're shifting to yellow. So after you get yellow, usually you're going to see that momentum shift to the upside along with the volume. So when the volume is shifting to the upside and the squeeze momentum is shifting to the upside as well, it's generally going to fire to the long side. And when you have that squeeze firing to the long side, that is, going to send you hopefully higher. Sometimes you will have squeezes that fire the wrong direction, but for the most part, they usually go along with all the other analysis that I just gave. So when you're looking at this right here, you do have some price resistance between really 107 and then about 109 or so. But I'm betting on this squeeze sending price breaking out, which would bring us up to about 110, 111. Now, in an amazing world, you'd get all the way at 115, but in this kind of market that we're in, I'm really just going for the lower targets, the easy targets with those squeezes. So if you go down and if you look at some of these lower time frame charts, that's also another way for you to gauge if this thing is going to go to the upside or the downside when it fires. And for example, you have a 15-minute squeeze that fired long. You have a 30-minute squeeze that fired long. Do you see how the bars went from red to white to green? That's firing long right there, the price action. And the 78-minute fired long. So it's usually a domino effect, right? You have the 15-minute goes higher, the 30-minute goes higher, the 78-minute goes higher, and now we're on to this higher time frame, the 195. Then ideally that one goes higher, then ideally the daily goes higher. So the dominoes are falling. I've already had these fall, and now we're looking for the higher time frame charts to get moving. So I am trading this one right now. I tried to get a couple different trades on Friday. I only got filled on this bullish butterfly so far. This bullish butterfly is going to be expiring in 11 days. So ideally I can get my price target before then. We're chug-a-lugging higher, so it's looking good so far. But right now you can see that we have a 105 call, which I'm long, 110 call, which I'm short, and 115 call for protection. So what this means is that I'm targeting the 110 price point. So with that 105 long, you really want the price to get as close as you can get it up to the 110 short. And if you can do that, then you can make money on the 105 call. And if it stays below 110, then you get theta decay on the 110. And ideally, you can make money on your long butterfly. This butterfly only cost me $1.37 a contract. It's already up 25%. As time goes on, and ideally as this gets closer to 110, hopefully I can take this off for, 50, 75% winner. I guess we'll see what happens. The closer it gets to expiration, as long as it's going my way, probably just see if I can squeeze a little bit more out of it. But that is my overall opinion and thought. The next thing that I could do is I could stack another butterfly. I could go out, maybe 25 days and add another one targeting 115. But as I mentioned, right now I'm just sticking with the lower target because that's the kind of market that we are in. So hope you enjoyed this video. If you want more education, you can follow me on Twitter at Trader Danielle, TraderDanielle. And join me in the options room at Simpler Trading. Other than that, I hope you have a great rest of your day, and I will see you in the next one.
Hey traders, thanks for watching this video. If you want to make sure that you get all of our free trading content, make sure you hit subscribe and also give us a like and comment down below. If you want to learn more about us and if you want to join us for live trading in real markets with real money, make sure you go to simplertrading.com where you can join us for more info. Thank you very much and have a great day.